Okay guys, welcome. I waited till the end of the day today. I've actually been pretty busy today and there wasn't a whole lot of change in the market. So what I'm going to do is just run through the stock charts. I want to show you guys kind of where we're at right now, where I think things are heading here in the future. Obviously everything in this video is just my opinion. This is not financial advice or trading advice, anything like that. But I want to point out what the charts are telling me at this moment in time, and see if there's any kind of big trade setups, which I think there actually are. So let's get right into it. We'll start out here with the triple Qs. Main thing to pay attention, that I'm paying attention to on the triple Qs as of right now, is the main trend line I'm looking at is this green trend line right down here. On the hourly chart, this is coming off the March 2020 lows. And you can see we've been walking up this trend line. We tagged it here as support, tagged it again there. Broke down here. We had a reaction there as well. Broke down. This was a bear trap. Okay, so the very first breakdown of this trend line was a false breakdown, and then we're just continuing to move higher. So I'm looking for a breakdown of this trend line here. I'm looking for an impulsive breakdown, of that trend line. That for me is going to be the next sell signal. Until I get that, we'll just go ahead and let this continue to do its thing. Now on the upper end, this is coming off of the September 3rd highs, and basically it's not my favorite trend line, but I wanted to mark it out. We had a reaction here, and we have kind of, we have some reactions right here where we're not going up anymore. We're just kind of going sideways. So again, we are getting somewhat of a reaction in this area, somewhat of a battleground zone. The market's trying to determine if it wants to keep going higher or break down towards the bottom of this trend line. Again, I'm looking for a break of this trend line to trigger the next sell signal. Until we have that, we'll just let this thing do its thing. Why am I not interested in just being long this market or going long? Well, a couple reasons. One, I'm not long right now. So to get long at this moment in time, I think is just extremely risky. If you're already long and you've been long, from my perspective, I am looking, I would be looking to kind of tighten up risk, sell into some of this strength. Again, you want to buy into weakness and sell into strength, and if you want to wait for the trend to break, usually you might not have that opportunity because it's going to come in the form of a big gap down and it's going to sell off quickly. So by the time the trend, the breaking of the trend is noticeable, you're going to give back a lot of your gains, maybe all your gains, I don't know. On the daily chart, we have negative divergence right there. That just continues. I just continue to point that out day in and day out. And that's how these negative divergences work. They build, and they build, and day in and day out, you continue to kind of grind higher, and then they play out all at once. So by the time, if this negative divergence is going to play out, we're going to get a breakdown in a sell signal. By the time I can point it out to you, I think, a lot of the opportunity will have been captured, or, it could be a pretty swift move, at least on the initial leg. The other thing that I want to look at here is the SPY S&P 500. This one has a lot more going on. This chart has a lot more going on. So to start this one, I'm going to start on the weekly. And a lot of people have been pointing out that they just don't like my trend line that I have here. This is coming off the 2009 bear market lows. All right, and we had no reactions on this trend line up until 2016, but in 2016 we got a lot of reactions around that trend line. So from my perspective, the trend was really established here in 2016. We held support right in here. On this week we held support there. That's 4 reactions, cluster of reactions 5. Then we broke in 2018, so this is the Fed reversal of interest rates, where they were raising interest rates and they were like, oh, actually, we're going to cut interest rates. This is their reversal. And then we have reactions from underneath. So you can see underneath, several reactions underneath. And then right there in 2020, right before the COVID crash. Now, the market knew, we were hearing reports about COVID before this time. And so I think the reason why we crashed at this moment in time is because we were back testing this trend line. It was technically induced and fundamentally induced, but I think the technicals, the market was waiting to run up and do a back test of this trend line. Then broke, the Fed came in, and you can see as I zoom in, you can see right where we're at right now. We're right there at resistance. Now, I am not going to say that we can't overshoot this, because I think since we're sitting there right on that trend line, I think it's completely possible we have kind of what looks like a breakout week, or we have some sort of an overshoot where we run higher. But if we do that, I will be looking for a failure of that breakout. So again, those are the signs I'll be looking for. It doesn't mean we're going to get the failure, but if we do get it, that's really the signal that this was a false breakout, and likely the very top. Now again, I said we were at the top right here. I put out a video saying I think this is the top. Clearly that was wrong, but maybe not by much. We'll see, and I mean, when I'm trying to make top calls on a market that's just been going straight up since March 2020, and to be off by a few percentage, I think is still good. So it doesn't mean I'm going to be right here, but again, let's give it a little bit of room and see where we end up. The other thing to look at on the hourly chart is the most recent wedge coming off the March 2020 lows, and you got the support line, kind of undercut it there, hit it right there, hit it there, and then we undercut it here. But you can see when we broke down, we ran up and did a back test, and it confirmed that was holding as resistance, and then we failed again. So then what did we do? We come back in, and you can see we're just chopping around this trend line. Looks like it wants to reject and break down, but we're still hanging in there. So we'll see where that goes. It's at a key level. That's all I'm trying to point out. We're at a key level where we should start to see some information that's going to tell us where we potentially are heading next for the next trend. It doesn't mean it has to be down. It could be continuing up, but we're at some major resistance and major levels, so I just want to point those out. Something to watch here, this is TNX. It's just tracking the 10-year Treasury yield, so the interest rates that pretty much mortgages, car loans, everything's kind of based off of that 10-year Treasury. And so we want to watch this, because interest rates are the key to this market. You get rising interest rates, the market's not going to hold up. It just can't. And so we've been downtrending in interest rates. Obviously, since 2018, this is when the Fed started cutting and pumping more stimulus into the market. We've been downtrending. And you can see there's your trend line right there. So again, we're at key levels. We either reject here and sell off, or we hold and pop through it. A spike through it's probably going to start to cause some problems. So keep an eye on that. It's just an important level to take note of, and we'll watch that. Okay, the dollar started to break down today. So here is the uptrend that the dollar's been in, and I've been saying watch the dollar. We started to break down today. That's definitely a breakdown. So we're going to see if this continues. If the market's going to fall, the dollar's likely going to catch a bid, but I guess it doesn't have to. You might see some sort of weird, you might see a rush out of the dollar and a rush out of the stock market. I mean, I guess that's possible. As of right now, this looks like a breakdown. Looking at the daily chart, we still have bullish momentum. So you can see the momentum is still up, but obviously, that's a pretty clean breakdown on the daily chart on the dollar. So what does this mean? Well, the dollar could fall all the way down here. Maybe we make a new low in the dollar. Maybe we continue to break down. So as of right now, that's the look of this. It looks like it's going lower. If for some reason we get a snapback and this is a false breakdown, then the dollar is likely to go a lot higher, and there should be problems in the market due to that. Someone asked me about Redfin yesterday, what I thought. I don't have a position in this. Yesterday looked like a breakout, all right? So you had this resistance level that we tagged several times around 82.50. And yesterday, nice clean daily breakout with a daily close. Today we got continued bullish price action up another 2.8%. So price action is obviously bullish and breaking out. The only caveat I'd put on that is that breakout is with negative divergence. You can see here that this negative divergence is clearly intact on the daily chart, which puts a higher probability that this breakout will fail. Doesn't mean it has to, but it puts a higher probability. So I would look for that failure. If you get the failure, a break back below this 82.68 would mean this is a false breakout. And for me, that would be probably a nice entry on a short position. We get a false breakout signal, and I think that Redfin's coming all the way down to this lower trend line around 57. We had some support right along there, kind of undercut it, but we overshot it. So again, that's what I'd be looking at, unless you get that false breakdown, or sorry, false breakout. It is a breakout. Qualcomm continues to look weak. We're just, kind of hanging out in here. Every rally, if I go to the hourly, you can see, you get these rallies and they're faded. Here's another rally right there. They started to fade that into the close. So to me, looks like probably heading down to 142, about 142 or so. And, that's really where the actual support, the first line of support should be at. Maybe we get a bounce there, maybe not. If we start to break down and head into this gap, then next level of support is going to be around 130. Now, they might step in a little early because this gap is pretty obvious. But again, I think we start to head in that direction if we break below that 142 area, which is what I think is going to happen, because the thing is that you had this uptrend channel right here. This is your uptrend channel. We broke trend. There's your sell signal, did a full back test, and then the impulsive breakdown. So we're starting to, this is the early signs of a change in trend. And it was all forecasted with the negative divergence. That's what these will tell you, that a change in trend is likely. And then now we're starting to see price action confirm that we're changing trend. So once we change trend, I think we're going to continue lower. Possibly could head all the way down to this 93.90. That's, over time, it's going to take a little while to get down there, if it was going to get down there. For me, that's probably the final stop on this trade, or the area I'd be looking to cover if you were short. Zillow Group. So Zillow Group's kind of recovered the support. It's recovered the support line. Here's the broken support right there. There's your support line, just walking up that. We broke it and had a sell signal. So I'm still giving this one a little more room. Yeah, it's going against me a little bit, but it's a starting short position. I'm looking to add to it on another break of the support line. We broke here, and we had confirmation sell signal, and then we ramped it up for a back test. So far, they've made it look like a recovery, but the market indices, the SPY is right at major resistance. So I think with the SPY sitting right there at that major resistance line, there's a high probability that this is going to break down too. So I'm going to give it a little more room. We still have negative divergence. That this high right here is a continuation of that divergence. So it's a new divergent high, which tells me it has a high probability of failing. So I'm looking to add to the short position on a break of 167. It depends on when we actually break. But this trend line, looking to add to that. Okay, and we'll just wrap with volatility. There's really not too much else I want to look at. So let's look at the actual VIX first. We'll start off with these VIX futures. So here's what I want to point out. Basically, on the VIX, you can see previously we had some support kind of right there. That was your support shelf in the VIX, and recently, and then your resistance was right up in this area. You can, it's not perfect, but you can see we're kind of sitting on a new support shelf right now, and right now that support sits right around 2250, somewhere right in there. So we're slightly above it, but we're not really breaking down below that too much. I mean, we're just kind of hanging out in this area with elevated VIX, with an elevated VIX. So again, coming down into support. So then I look at things like UVXY, and you can kind of see where we're at. Now this one's leveraged and it has decay, so it obviously will drift lower as the VIX kind of just hangs out sideways. This is going to continue to kind of drift lower as they have to recycle into the options that give them the leverage in this instrument. But you can't trade the VIX directly, so you have to trade VIX proxies. This is one of them. And you can see we're kind of at that support area. We might go a little bit lower, but we're still in that area on the VIX where we're at near support. So something to take note of. The VIX recently had a big spike, had a big pullback. That might have been the kind of the shot across the bow before we get the actual large spike in the VIX, because this spike in the VIX was, I'm looking for a lot bigger move in the VIX, basically. If we're going to get a spike, I'm looking for at least up here on this UVXY up to 2340. We could get up to 29.29. It's possible we go way up into this range, but I think it's not as probable. So for now, I'm just going to stick to one of these levels. But I think we should at least get up to this 2350 area as kind of a minimum spike in the VIX. You can see one more thing before I go on the RSI and the PPO. We just made a new divergent low. So the bullish divergence is still intact right there and there. And we're just making a new divergent low. So when you're diverging from momentum, oftentimes momentum leads price action. The momentum is bullish. Price action is obviously drifting slightly lower. We could easily see that explosion higher in the VIX. Likely we need a catalyst. So whether the Fed speaking on Wednesday, I believe, is our catalyst. We don't exactly know what it is, but it's set up that when you get a catalyst, this thing could explode to the upside. So just something to point out, and that's all I got. So leave me a thumbs up, and I'll catch you guys on the next video.